Alasdair, the Chinese investment demand for gold is up 44% year on year to the end of the second quarter. Do you think that China's demand will continue at this pace, and why?
Broadly speaking, yes. Bear in mind that the Chinese have not many alternatives when it comes to investment. Property is out. The stock market is not everybody's taste, though that does look a bit better on the Shanghai market. And bank interest, bank interest rates have been cut and cut and cut. So that the Chinese housewife, who is an enormous saver, is likely to continue to direct her investment or her savings into gold accounts, which the banks offer. Now, having said that, the statistics that are coming out of China Gold Association say that there is falling demand. But what we're talking about there is demand for jewelry in the main. And also, we've seen maybe a bit of a pause, if you like, in ETF purchases. But these are essentially, it's either speculative dealing or alternatively physical jewelry demand. Now, I would expect with higher prices that physical demand for physical jewelry would decline. And we see the same thing happening in India. So there is a bit of there's several elements to this, and you've got to look at the thing in the round. Central banks are still accumulating gold. We have a problem in the West now, which I think is increasingly going to drive values. And, particularly when gold breaks out above the current trading range. The problem that the West has is liquidity is now disappearing because the West has relied on central banks to lease their gold into the market to provide the liquidity for traders. Now, central banks, having seen what happened earlier this year with gold leaving the Bank of England, know that their leased gold has disappeared. When's it going to get back? Are they going to get it back? I would suggest that central banks will stop leasing their gold entirely because there is absolutely no point in doing it when the risk is not in gold, other than maybe short-term fluctuations, but the risk is actually in paper currencies. That is why central banks in their reserves have been adding to gold and reducing their exposure to fiat currencies. So as that liquidity in the Western capital markets diminishes, I think that that's going to begin to drive things. And we have also seen base metals being undervalued, certainly measured in gold. And on that basis, unless you believe gold is going to fall very substantially, which seems unlikely, then under those circumstances, you can see that the general metal complex is likely to rise in value in the coming months. So this is, I think, a problem for the paper markets, increasingly a problem for the paper markets in the West, which have suppressed base and precious metal prices over a long period of time. How do they deal with a situation where they lose control over it? And I think that is just what we're beginning to see.
Well, I think it's heading a little bit towards what Jim Sinclair always used to make reference to, that do what the central banks
become
do.
Your own central
Become
bank.
your own central banks.
Yeah.
And buy gold.
It's so important.
Yeah.
Yeah, absolutely.
But one great analysis, Alasdair. Thank you for that.